catalyst, or what would you look for to go long Bed Bath & Beyond today? You're muted, Glenn. I just unmuted you.
I said, wow, we don't feel very good about the business.
Yeah, I'm going to pull up the Capital IQ chart while you're, just to take a look.
Well, let me put it in a slightly different framework. Barnes & Noble's trading at around 2 times EBITDA, and I don't find that materially attractive, because I can understand why it's not going to generate 2 times EBITDA, translating to free cash flow, translating this to money into investors' pockets. So, I would be interested in Bed Bath at 2 times EBITDA.
It's trading right now, Glenn, just so everyone can see. So I pulled up. So this is a bombed out stock, down 75% in the last. This is a 5-year stock chart. So this is over 4 years. Right now, it's trading at 0.3 times sales, 3.2 times trailing EBITDA, 6.6 times trailing earnings. So those are starting to get to be numbers, Glenn. Where it's sort of cheap. It's getting cheap enough to be sort of interesting, right?
But take a look at the debt.
Okay, so here you've got
1.5 billion of debt. Every single one of their
stores, not including leases.
Every one of their stores is run off of an operating lease.
Yeah. So there's really much greater debt.
Yes.
So let's pull out the 10-year. I'm just going to pull up revenue, and you can see the decline in the fundamentals. So here I'm going to pull up revenue and operating income, right? And what I would be looking for here is some sort of bounce. I mean, look, you can play it just in the short term on sentiment, and you could just say, wow, the sentiment is so bad, I'm going to play it for a bounce, right? And it's getting cheap enough, stocks trading at a 10-year low, that maybe there's some sort of bounce, right? But if you're going to play this for a 2 or 3 year, if you really want to make money here, look at operating income, which peaked at 1.6 billion and is now more than been cut in half. It's down to 712 million as of trailing 12 months, right? So revenues have flatlined, operating income's gotten cut in half, and I think from today's price, you could make money on this if operating income merely stabilizes. You don't even need to, if you want to make 2-3 times your money, operating income has to actually turn upward, right? And for investors to believe that that's somehow sustainable, something like what Best Buy did. You know what? I'm gonna here the sentiment is so bad that even just a stabilization, you could get a quick 50% on your money. But you'd better be out there in the stores, talking to people in the industry, and getting a super high degree of conviction that the company is doing something to stabilize the business that's going to work. Obviously they've been very late to the online game. Maybe you think they're going to be successful there, right? So I'm not saying Bed Bath & Beyond is a hopeless situation. It's nothing like Hertz was, down 80% with a huge pile of debt, likely going bankrupt soon, right? So let me just pull up Best Buy here to give you guys a sense of what a real turnaround looks like, where a stock, goes up 5x. So here's revenue and operating income for Best Buy going back, 10 or 12 years. And look at operating. So here's Bed Bath & Beyond, what operating income looks like today, right? And look at how it turned for Best Buy. And the stock went from $15 a share to something like $75 a share, right? So that's the kind of turn of a beaten down, bombed out retailer that really turned. And Best Buy, it's a brilliant case study. If I can find the article, there was a good article. I'm going to see if I can find the article. It was like in Forbes or Fortune. It was an in-depth profile of this CEO who came in with a plan to prevent Best Buy from going the way of Circuit City, i.e. bankruptcy. And he pulled off that plan superbly. And Best Buy is cranking out over 40 billion of revenues right now, but more importantly, cranking out $2 billion of operating income, down from basically, basically zero. Well, it didn't get down to zero, but it got down to, operating income peaked at 2.5 billion, got cut in half to 1.25 billion. And that's another thing you want to look for in a turnaround. The company is still producing, even though it's down 50%, still producing a lot of operating income. And now it's almost doubled. So it's interesting how closely these numbers here sort of mirror Bed Bath & Beyond. Flatlining revenues, operating income cut in half, but still, pretty healthily positive. And the question is can you catch a turn in the fundamentals? That's where you really make a lot of money. Anything to add, Glenn?
The only thing that sort of I'm thinking about with Bed Bath & Beyond is who shops there and why.
Yeah.
Because everything you get there, you can get at a Walmart cheaper, at a Target, at Amazon. They've got an inferior cost structure to all of those companies, led by, of course, the disadvantage vis-a-vis Amazon. And I have walked through Bed Bath & Beyond relatively recently, and boy, do they sell a lot of crap. Or at least do they stock their stores with a lot of crap. So, you'd need to see, honestly, to be interested, it's either going to be trading at under 2 times EBITDA or and not operating on a distressed basis, or you need to see a credible plan out there that has some sense associated with it. Part of that plan, in my view, would have to be terminating probably half of their leases, and making a go on a smaller, more profitable basis, and then maybe they can ride it for some period of time. But I think the business is dead in the long term.
Yeah. Now, honestly, I would have said that about Best Buy, and I was completely wrong. It turns out that technology products, there is a substantial fraction of customers, my wife, my mom, who are just not at all comfortable with technology, and they want to go in and see and feel and touch the products, and they want to interact with a human being who can show them how it works. That if they buy a laptop somewhere and they can't figure something out, they can bring their laptop back into a store and some technology savvy person can help them figure it out. Like, there is a reason for Best Buy to exist, and I think it will continue to exist. And the technology sector is so gargantuan that even if 90% of the business, goes online, I almost never buy anything at Best Buy. But there's a significant segment of the population that does and will always want a Best Buy. So that's a difference between, the stuff that Bed Bath & Beyond is selling, where I would argue very little of it would people feel uncomfortable buying it online, and where they want to, need a lot of hand holding. So I think it's Hussein that says, you'd have to go in and get conviction that there's some real value add to having the bricks and mortar there. And I really like the idea. He writes, perhaps a survey on shopper habits can give you insight into that. So before I bought Bed Bath & Beyond, I would put together a survey monkey of some sort, perhaps, and I would send it out to everybody I know and find people who actually shop at the store. And then I would follow up, and I would ask them, why did you used to shop there, and do you shop there more or less? Why do you continue to shop there? Because I understand that I am not a Bed Bath & Beyond customer. So it's very, very important to understand, if you're doing an analysis on this, that we are not the core customer of Bed Bath & Beyond, and gaining a deep understanding into that core customer and why that core customer might continue to shop and spend there, even knowing that they're paying a higher price than they could buy the same product online. That would be a really important piece of the analysis. Getting out of the 10Ks and 10Qs and into the stores and into talking to the customers would be, I think, a critical element of this. Let's see, Glenn, I